The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Thursday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Thanks for kicking off your day right here with us. Basil Chapman, great program early at 8 o'clock, and we kick things off, and we got a little bit of selling coming into the market in the last hour or so, half hour even. We have the NASDAQ. We're trading right now, negative by 12 points. You were just up at 25,008. What's the high? 822, and you give up almost 100 points. A little bit of selling coming into this market in the last half hour or so. We're talking about jobs this morning. We're talking about some earnings. S&Ps were flat. We had a little volatility yesterday. You talk about it, man. We sell off into the close. You sell off after hours. You were higher, and we're right back to where we were at the close yesterday. S&Ps negative by 1 point at 68.24. Dow negative by 34 points. As I mentioned, a little bit of selling coming in there. And you have the Russell negative by 1 right now. Bitcoin down $900. We hit 99,000 on Tuesday. 103,000 is where we are right now. You jump over to yields this morning. A little bit of higher price, lower yield coming at you. So we talk about yields. Of course, yesterday you got a lower price number. We had ADP payrolls that were strong, pointing to a higher yield. Maybe the Fed doesn't need to cut. We're back to 4.11 right now, 4.11. The yield on that 10-year, we jump over the dollar. Tariffs in focus yesterday. Prediction markets think it's about a 70% chance that those IEEPA tariffs are ruled unconstitutional. 70%. Strong arguments. You get the 3 liberal justices on the court. That means you only need 2 more. Chief Justice Roberts seemed pretty skeptical. And then Gorsuch, very skeptical as well. And Amy Coney Barrett, skeptical as well. So you only need 2 out of those 3. And it seemed like it was going to happen. And the implications, we'll see how it plays out. Not really playing out this morning, I think, but pay attention because we might get some moves in terms of how it moves. But we're getting a little bit of a rollover this morning as things pick up. And guess what? You see that volume, folks? See that volume? That's what you need for the market to start to get some action. We're getting some action this morning. All right, let's talk about some jobs. U.S. companies announced the most October job cuts in over 20 years. That's the number out here. U.S. companies, 153,000 job cuts last month, the most for any October. Now, it's any October, okay? In statistics, there's a lot of variance month to month, right? So maybe it just didn't fall on any October, right? Nonetheless, you're going back to 2003. There have been job cuts. Year-to-date job cuts, over 1 million, okay? The most since the pandemic. I would argue that is a much more clear-cut statistic. U.S.-based employers, the fewest hiring plans since 2011. Whether you're talking about Target, Amazon, Paramount, Skydance, the two, one and the same. But yeah, that headline out there from Bloomberg, and you look at that number, and there's your uptick. Okay, now, this is just October. I would argue that's a distortion of data. Okay, give me the context. Give me the context of how those months shake up in other years, whatever it be. But yeah, as you can see, where were they the worst? At times when the market was the worst, right? So it's not like it doesn't mean anything. When you had those rapid losses in jobs, the market was in trouble, whether it was 2001, whether it was 2008. Okay, but we haven't hit that number since the 2000 dot-com bubble implosion, basically. All right, let's jump around to some of the Magnificent Seven this morning as we got a little bit of selling to kick things off. Amazon shares, NVIDIA, up by $1 so far, trading at $196 and change. Now remember, NVIDIA was just trading, folks, at $212. $212. Yeah, you're at $195. Okay, you hit $210 twice. Not like that was a cherry-picked high. You hit it again a couple days ago. That's $15. $375 billion in market cap off the top. I mean, I know I can't help but mention it, but you're under that $5 trillion mark. But boy, holding up pretty well near $200. You're at $4.8 trillion right now for NVIDIA. We check out Apple this morning. Apple shares trading down $1. We check out Microsoft. Microsoft shares negative by a couple bucks. Amazon down by $1. Tesla shares, TSLA. You're down by $2 to $4.60. Saw a report this morning talking about that they think that Tesla, that they're going to get it done for that pay package. Expected to prevail. Elon. $1 trillion, the going market for a CEO these days. And he's a special CEO, of course. But yeah. So after the meeting Thursday, the company's expected to disclose the results of the vote. There's little mystery to the outcome. Okay. Shareholder has suggested that shareholders approve the plan. Results of the vote are expected after the annual meeting. And yeah, that's expected to go through, and I expect it does, even with some pushback. The pay plan doesn't require him to dedicate a minimum amount of time to Tesla, nor does it at all limit his involvement in politics. And at the same time, they're pushing that Tesla can spend money on Elon's private companies. That's the one that doesn't make sense to me at all. You want to argue that it's warranted to keep him out of all the other business going on? That's a great argument. It's the only argument that makes sense, right? But simultaneously, he's running other companies that are private that he's going to use Tesla money to fund. I don't understand the two of those going together. Getting paid $1 trillion as a salary employee for Tesla while you're in control of that company and using company funds to fund your multi-billion-dollar private companies. Doesn't make me a hater, folks. Did you just hear what I said? I don't think that you'd be defending that in many, I'm not saying you, anybody, right? Myself included. To be paid $1 trillion, and listen, there are options, okay? There are options that the stock needs to go up. It's still a potential $1 trillion play to be an employee, not an owner, an employee. And at the same time, he wants to, as an employee, direct company funds to his private businesses that shareholders of Tesla have no exposure to whatsoever. All right, let's talk about some other equities. Peloton. So they got a recall going on. Peloton shares down a little bit. Okay, there's a little volatility for you to 705, but they're recalling 800,000+ bikes over seat post issues, 2 injuries. Consumers should have immediately stop using the bikes, and they're offering a free seat post that can be self-installed at home. Now, this is not like when Tesla recalls their vehicles and it's a software update or something, okay? They got to send you a physical seat post where you're talking about, I mean, for 800,000 bikes, 833,000 made between 2019 and 2022, sold basically for the last 5 years, right? They stopped making them in 2022, but they've been trying to sell them for the last 3 years. So be careful of those Peloton bikes if you're using it. Watch out for those seats. And yeah, great point. You looking for a Peloton? Look in that used market if you want one, because you might be able to find one at a much more affordable rate, because they are still pricey. We're coming back, folks. Market slightly in the red. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC. Welcome back, folks. S&P's off by 5. NASDAQ off by about 39 right now. Market slipping into the red over about the last half hour or so. And you see a little bit of selling with some uptick in volume there. We drive down to a low of about 25,700 in the NASDAQ 100. And we jump around to some of the action today. So, yeah, CarMax. So their CEO is going to unexpectedly step down. An 8 to 12% decrease in comp store unit sales, net earnings per diluted share between 18 and 36 cents. Yeah, check out this one. All right. How about that chart? Yeah, is that enough trouble for you for CarMax? Whew. Down to $41 from 90. You're breaking everything. You're doing it with volume. Wait, look at this. So we're coming into the pandemic lows of CarMax, which is also the lows of 2016, which is also the lows, or below those lows, of 2014. Going back 11 years ago in CarMax, you're $2 below where you were 11 years ago in CarMax. And look at the volume ramping up on this sell-off. Now, this is a monthly, so we're only 6 days into the month of November. You're probably going to blow away the volume that you did here, and you got lows out here of 41.25. So we're below the lows of 2016, and the lows of the pandemic, 37.59. Oof. Yeah, preliminary outlook for the third quarter 8 to 12% decrease in comp store used unit sales. So the CEO is stepping down. They come out with that information, and they're not even reporting their earnings. This is just a material fact. CEO stepping down. They're going to miss their numbers. In September, they talked about that they had fell short of the company's expectations, and they report their numbers December 18th. December 18th, 1 week before Christmas. Boy, what gets in front of that stock right now? Down by about $5 on the open. We haven't even put it on the chart yet. As in, it doesn't register on the weekly. You're going to open at $35. Yeah, so excuse me. I was looking at the chart. You're below everything. Yeah, you're going to open below the pandemic lows. You're going to open below the lows of 2016, below the lows of 2014. My goodness, what do you got out here? Some highs? Yeah, you're bumping into the highs of 2011 on CarMax. All right, jump to the betting world. So Penn Entertainment, who are the ones who originally bought Barstool, right? Sold it back to Portnoy for $1 after that venture did not play out. They got to run all the way up to 142 on some of that euphoria. You're back to $16. Now, they had a deal with ESPN, and that deal's now ended. They're out with their numbers. The early termination of their exclusive online sports betting deal, and then you go from there, okay, to DraftKings taking over that role. ESPN sports betting partnership from Penn. So they end the Penn agreement. They shift it to DraftKings. Our betting approach has focused on offering an integrated experience within our products. Working with DraftKings, there we go, will allow us to build upon that foundation. And they got some problems. I think they've already botched this one. I was thinking about this earlier, reading it. ESPN had such an opportunity to lean into it, right? And they just didn't. And so, yeah, now they're going to try and partner with DraftKings. Okay. You look at DraftKings today, you're up by more than $1. Catching a bid on that news. Okay, you spiked to 30.50. We're back to 29.04. I think they've already lost the opportunity. When betting was taking over, it would have been so cool, I feel like, to open the ESPN app and have direct access to gambling. But they've lost that opportunity. It is so readily available at this point that it's no longer tantalizing. They missed the first mover mark completely. Yes, they'll always have a role. Okay, you go to ESPN to provide sports for everything. The NFL now has an equity position, right, as part of that. How does that circulatory nature of the NFL being a partner with ESPN and ESPN being a partner with gambling sites? And just prediction markets in general taking off and how they're going to be constantly. You know, it was already a tough market for these gambling sites in terms of actually making money when they're all competing. But now they have to contest with Kalshi and Polymarket. And speaking of, you know, the one thing it is great about prediction markets, folks, is when people have to put their money behind it, you really get to see what people believe is going to happen. Okay, and yeah, if you were listening, Supreme Court ruling Trump's favor, only a 28% chance right now. Okay, they're looking at about 72 to 73% chance it gets overturned. Here's what I'll say about that, though. And somebody tell me if you understand how these volumes work on Kalshi. Okay, and I'll have to get somebody from Kalshi on to talk about this. I'm sure they'd love to talk about their site, how they work, right? $642,000 of volume. Doesn't really seem like a lot if the market's going to start. I mean, imagine how often this gets cited by people in the stock market trying to gauge the outcome of a Supreme Court verdict that's going to dramatically drive what's going to happen in the market in the short term, potentially long term. It's one of the biggest cases ever in terms of presidential powers of taxation, right? And meanwhile, it's all based on 640 grand. I mean, imagine if I can swing this market for $1 million and then set up a replay of a much larger play in the market for what it's worth, okay? $642,000 is all you're talking about here. You go to the order book. Okay, check this out. It's not a lot of money that's supporting these bids in certain aspects, okay? The total trade yes versus trade no, they're hundreds of dollars here. Hundreds of dollars. And these are getting cited all the time as if it is the gospel of probability. So volume, back to volume analysis, right? Volume analysis on Kalshi. Hey, it's real, man.
Sharpening
Folks,
your
markets in the
skills
red.
as
We're
an
coming back
investor
for the
is
opening
like
bell.
Getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got equities open, and yeah, you got a little selling coming into this market, giving up all those pre-market gains. S&P's right now approaching the session lows. Pre-market, we're negative by 12 points on the opening bell, off 0.2%. NASDAQ 100, you got some selling as well. NASDAQ 100 off about 150 points from those highs that we were at just at 8:30. We're approaching the overnight lows. NASDAQ off about 0.4%. You jump over to the VIX this morning. Slightly elevated. not that bad when you look at, the market moves right now. As I said, coming into the program, folks, we got a little selling coming into this market. You drift higher, things accelerate. We're breaking. This is a 5-minute bar. And as usual, any opening bell bar, you're going to dwarf anything you did pre-market, and the selling's coming into this market right now. We'll see if it holds. Papa John's up by 2.5% on their numbers. Yeah, this thing, you talk about under pressure, man. Let's take off these. Boy, well, if you're looking for an area of support, it's $40. It's going back to where you were in 2018. Back this up even further. Man, look at this. You break through it in 2013. You come back, you test that area in 2014. $40. You want to get some action in Papa John's. $40 is the price point. Nice action last month with some bid and volume, but guess what? You're going to dwarf that this month, man. You've already done 17 million shares. It's November 6th. All right, some of the other equities on their numbers. Yeah, ELF. Talking about this one in the den last night. Well, watch out. Now, what struck me most amazingly in this is that they're going to do $200 million with Hailey Bieber's cosmetic line. To be an influencer or a famous person that is able to monetize your brand is an extremely successful operation if you get it done right. The Kardashians, the queens of that. Hailey Bieber, though, $200 million a year, just like that. You look at ELF, okay? The last quarter, for the full year, 1.55 to 1.57 billion. Okay, that's 20% growth. Now, this thing's getting slaughtered this morning, okay? You jump over to this company, though. And this company is a $5 billion company, okay? It's a $5 billion company. And meanwhile, Hailey Bieber's line alone is making up more than 10% of their entire yields. $300 million on an annual run rate basis. They're going to increase sales by $200 million this fiscal year, and it's going to be $300 million. They're only doing $1.5 billion. That's 20% of the entire number is based off Hailey Bieber's line. What if she decides to do something else? There's massive risk. And it goes, this is not even talking about that they're missing in terms of guidance, but just that alone was striking. I mean, we might not be the ideal demographic of people that are going to ELF in general, right? Whether it's younger women in general, women of all kinds. And our demographic at TFNN skews male, even though we got some great females out there, tigresses, okay? But how many people out there knew that ELF is built off 20% of their sales are from Hailey Bieber's line? It's astounding. That is a massive level of risk if you were buying that equity. All right. On the flip side of that, Snapchat. Yeah. Now, what I'll say on this one is that's a weekly chart, okay? You do have some nice buying out here. You got some selling as well, chopping around near $8. We're up by 14% right now on Snap. And how about almost a $500 million buyback? Yeah. Perplexity is going to pay $400 million to integrate their search capabilities into Snapchat. They're paying Snapchat for Snapchat to use their AI capabilities. Whew. Thought it was the other way around, right? Apple's paying Gemini to use their AI capabilities, and meanwhile, Perplexity is like, no, we need to get in on the action. Yeah, Perplexity AI will pay them $400 million over 1 year to integrate. And it's a huge number, folks. When you look at fourth quarter sales are 1.7 billion, probably. Okay? That's a huge number. Their 90-day sales are 1.7 billion, and they're going to get paid $400 million extra by Perplexity. Yeah. Average revenue per user, $316 versus $313. can't believe 500 million people use Snapchat every single day. I've pulled it up. It makes no sense to me. I have no concept of why it's even enjoyable at this point. The whole context of disappearing messages and how it takes off originally makes perfect sense. And, here's my old man rant, okay? I'm 45 years old right now. I'm not that, but I am not the target demographics for Snapchat. I get that part. But I scroll Instagram. I do not understand. Don't understand the attraction level of what is posted on that network. But nonetheless, you're higher today. But on a longer-term basis, folks, be careful. Okay, all you're doing is bouncing around this area that's been an area of support and resistance. You back it up even further than that. Look at this thing. Okay, it loves to trade and shop around near about $10. You're still under that price point. You've been here since 2017, folks. Snapchat up by 13% today. Yeah, we had some movers last night. DoorDash, they were lower on their numbers. Okay, down by 14% right now. And they got to spend some money. That's what they're talking about, spending some money. And the market says, what? You're off by $32 right now. It's been a heck of a run. Jump over to Lyft on their numbers. Up by 9%. They made 11 cents versus about 8 cents. 8 cents the market was looking for. Uber shares. Yeah, trading lower on their numbers this week. Just chopping around within that channel line. Uber. That channel line. Basically the beginning of 2023. Put it on a weekly. Let's check out the volume. Yeah. Keep your eye on Uber. It's a great equity, but you're probably heading down to the bottom of this channel. We got selling this week. You're going to do it with volume. It's only Thursday. We've already done 100 million shares on an earnings week. And, you're coming into this bar, and we're already below it. The low of that bar is 92.12 from September 15th, the week of. And you did 141 million, and we've already done 100 million. And I say already as in you're going to do a lot of volume today digesting the numbers for DoorDash and for Lyft, I think. Down by 1.1%. Market, a little bit of negative action to kick things off. Let's check in on the leaders. NVIDIA up by 0.8%. Apple shares slightly in the red. Microsoft this morning off by 0.8%. Google's been on a tear. Look at this, up by 0.7% for Google shares. So keep your eye on Tesla. Expected that vote will pass. Be surprised if anything after the market does not. But always a potential. Tesla, right at the highs of last year. Tesla up by 0.4%. We'll come right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got markets in the red. We have the 10-year right now with higher price, lower yield, 4.1. Okay, 4.1 is where we're at on the 10-year right now. What's interesting is you have lower yield. Okay, we're off by about 5 basis points from where we were yesterday. So lower yield. And yeah, the dollar all the way down to 99.74 right now. Slight bounce, but lower yield, weaker dollar. That's putting a bid in gold yet again. But realistically, folks, gold's just happy around 4,000 right now. And that's probably a good thing on the longer term perspective in terms of a little bit of a consolidation after a heck of a run. Excuse me, you got Boeing out here reacting to some news hitting the tape that a judge tosses the criminal case over the 737 MAX crashes at the DOJ request. To the Department of Justice, they don't want those cases going forward. I'm sure we'll be hearing about that one. Seemed like there was some criminality going on there with some of those cases on the 737 MAX. We'll leave that one right there. All right. And staying with airlines, so 10% of flights going to get cut across the board from major airports. Delta shares, they're not reacting to that at all. Any airline. Delta up by 0.5%. You see the volatility higher yesterday. United, same exact action. Getting a little bit of a bid on the open. You jump over to JetBlue. I almost chuckle every time I pull it up, folks, because it's such a different animal. It looks so tough on the charts. Just being real. Now look at the selling we got last week on their earnings. You drive down, you do it with volume. You trade lower on 157 million. And you're bouncing on 62 million right now. That's a weekly. You back this up on a monthly. Boy, you get all that selling in April. You get tremendous selling coming down to those lows in October. It's a tough-looking chart for JetBlue. All right. Speaking of yields, let's jump to the home builders for a moment. Now, these things caught quite a bid. Put it back to a daily. The lows of 498. You drive up to 143. They were really accelerating at one point when yields were dropping. Mortgage rates in focus, right? We've pulled back from there, okay? And you're talking about a pullback. Lennar from 143 down to 120. You're off almost 20% from where we were. D.R. Horton, you make a run all the way from 110 to 184. We're back to 145 right now. On a Fibonacci perspective, the pullback that we're looking at, let's get the larger one out of the way. Approaching the 618 from the run that began just in June. Now, you talk about these home builders, okay? Great article over here on Bloomberg this morning. You want a 1% mortgage rate? You can get one for a year. I'd much more, I would advise that instead of taking a 1% mortgage rate for a year, folks, that if they're giving out some of the deals that they talk about, and they are, okay, take the fixed rate. Okay, some of the large private builders in certain markets, yeah, you talk about subsidizing these loans, and they have to, folks. They are not in the business, okay? Like you and I, we might just hold on to a home. If you have the liquidity, right, you hold on to it. You're not worried about meandering the next 6 months. You say to yourself, I know the value. I know the rebuild value. I'm going to hold it, and I'm going to get the price that I want for it, that I think I can get. And even if that means holding it for a year or two, right? Maybe you say, you know what? There's a lot of volatility right now with rates. Tariffs are in focus. The market thinks the Supreme Court might overrule the tariffs. There's a lot of volatility. I'm going to let that play out, and then I'll put my house on the market and get the price I think I want. That is not what the home builders do, okay? They sell the home at the price they can sell it at, and the way they're doing it is subsidizing mortgage rates. I was looking for the words to highlight it. Okay, now check out some of these deals they have going through. 3.49% fixed rate on a $414,000 home. Yeah. San Antonio, that is. Okay, certain markets in particular. Okay, San Antonio, one of them. They get down to some of these markets here. Come on, where are we? They list some of them. You want to pay $2,000 a month on a brand new 4-bedroom home and have a 2% rate? I can find that now. As crazy as that sounds, it's all negotiable. Okay, single mother of Florida, relocating from Florida. D.R. Horton, the biggest U.S. builder by value. Introductory rate less than 1% for the first year. Yeah. Take the 3.99 fixed rate, folks. It's a 30-year locked-in rate, and you have the option of getting out of it at any time. Don't take the 1% and find out where we are in a year if they're giving you 3.99% on a fixed rate. And folks, living in Lakeland, Florida, okay, you better believe that this is happening in markets, especially like where I am as well. Okay, we got huge developments. I've talked about it many times on this program. One of the developments in particular, Lennar and D.R. Horton, okay, I think it's called Wind Meadows South, I believe is what the development is. I'll look it up. Maybe I'll talk about it even after this. They're both building, okay, 1,700 homes. Yeah, it is. Wind Meadows South, okay? It's like 1,700 homes, something like that they put out there. Now, what this article talks about here, okay? Nope. Yeah, that's it. New construction premium? No. Prices for new homes are sinking below resale values for the first time. Why? Because they're subsidizing everything to push out their inventory. Now, here's the other side of this, okay? This isn't the other side yet. Builders spent an average of 7.5% of sales prices on incentives in the 3 months ended in August, up from 4.8% in May 2024. Okay, it's on the rise. Still not a huge number when you look at 4.8 versus 7.5. And a lot of times, folks, you know, you look at the costs of just closing out and selling, you're always paying 3% for somebody to sell your house right off the top. They're not. They're paying employees, okay? So they're not that far above, but they're historically above where they've needed to be, okay? Rates 3.75% in Denver, up to $70,000 in price reductions in Charleston, South Carolina. Lennar spent 14% per home on incentives. Yeah, up from 10%. That's a big number. Now, here's how this translates. If you are in an area like Lakeland, okay, where you are competing against these homes selling, it's a difficult market. And that's why no matter what, if you're selling a home right now, you're competing with these homes. You don't want to be the home that needs a lot of work when you have brand new homes coming to market that are affordable. I talk about it all the time. You can buy a brand new home, 3-bedroom, 2-bath in one of these developments that is a community. You're going to pay a small HOA. It has a pool for $350,000. The other side of that, though, folks, is in markets like Tampa, okay, the best markets in the best cities where these home builders are not there, those home markets are on fire. Okay, because those home builders aren't there. they don't have the land to be building in cities, right? It's cities, you're just dealing with older houses or new houses. And the new houses aren't as prevalent. We'll come right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. And yeah, Hecla Mining Company up 26% on their numbers last night after the bell. Talk about a rocket ship. And you're coming right up to the highs that we had earlier this year. Those highs, 1544. We're at 1528. We just hit a high of 1542 for, how's that? About 2 pennies. Zoom in on the volume of what we're doing. We had some good volume up there, but I bet we're going to blow it away today. We're only 24 minutes into the trading day. And yeah, you get the markets up by, 9 million markets up. Hecla trading higher by 9 million shares, coming in at 27 million for the whole day. Listen, on the market today, folks, okay, from a fundamental perspective, there's a good chance that those tariffs get overturned. So try and figure out in your own head what you think is going to happen with the market, because I think that's what's coming down. The 3 liberal justices, okay, and I am not a Supreme Court scholar. I'm not here to tell you what the Supreme Court's going to do, but I'm here to tell you about the market, folks, and that's how I'm looking at this market right now. And as we're getting a little bit of a sell-off, you better be aware of the fact that what do you think the market's going to do when these complete blanket tariffs get overturned, because you got the 3 liberal justices. The Chief Justice Roberts seemed pretty skeptical, and Gorsuch as well. I think those 5 are happening, and I think Amy Coney Barrett is happening as well. But you only got to get Chief Justice Roberts and Gorsuch. And if you listen to the arguments, and I encourage you to go listen to the arguments if you haven't, folks, because it's a remarkable moment in history, no matter what. And you have great legal scholar minds between the Solicitor General, the plaintiff attorney, who was a former Solicitor General, and the 9 justices. And just hearing it all play out is remarkable as well. But there's a possibility that the market says, and listen, this is not going to destroy everything, okay? But it is going to be a potential risk-off environment that you got to be aware of, because I don't know how it's going to play out, and just the volatility of how that gets replaced, how those trade deals get done, and there are other manners that can happen. Okay, but that is some volatility. It's one of the things in play this morning, and you're going to get that ruling probably in a couple months. So that's hanging over this market for 4 to 8 weeks. That at one point, you're going to get a notification, and they could be overturned. All right, folks, stay tuned. Mr. Basil Chapman, he does his program at 8 o'clock. We're replaying it right now. So Basil coming up, Steve Rhodes at 11, Fast Market at 12, Larry at 1. I'll be back at 3. Have a great Thursday, everybody. Thanks so much.